Here's a topic that has not been in our lingo for quite some time, and that's assumptions. The reason this is coming back as a kind of a hot topic right now, obviously, is because rates are higher. We've had a period of really, really low rates for the past few years. So we have a lot of homeowners or sellers out there that have mortgages, that are probably in the threes, maybe in some cases in the twos. So if those folks wanted to sell their home and enter into an assumption agreement with a buyer, it could be attractive for all parties all the way around. So let me just give you, since this is kind of coming back up now, let me just kind of give you some details around how assumptions work. First of all, what is an assumption? This is simply an agreement between a seller and a buyer for the buyer to be able to take over the seller's existing mortgage under the original terms of the mortgage. So you can see from the seller standpoint, it makes their property or the deal more attractive for them. From a buyer standpoint, they get to take over the seller's mortgage at perhaps a great rate, maybe much better than they'd be able to obtain in today's market. So a few notes for you here. The assuming party or the buyer does have to credit qualify. So, it's not like they can just take over the loan without doing anything. The lender has to agree to let them assume the loan, which means they have to credit qualify. In some cases, the assumption process can take a couple months. It can take up to 120 days. As a general rule, as far as what loans qualify for an assumption, usually it's only FHA and VA loans. Normally, conventional loans are not eligible for assumptions. I would say you would want to check with the servicer though, because that language makes me think, maybe there would be some exceptions to the process, but normally it's just FHA and VA. The loan has to be current, so it cannot be currently, or it cannot be delinquent at the time for there to be an assumption or an opportunity for an assumption there. It has to be current. No appraisal would be needed because there's already a mortgage in place and the existing loan to value stays there. Couple more things. Let's see. On VA loans, this is really important. So a non-veteran can assume a VA loan, but the veteran needs to understand that if that happens, unless another eligible veteran assumes that loan, then the original borrower, if it's a non-veteran assuming the loan, the original veteran borrower is going to lose the eligibility, their VA entitlement. That's the word I'm looking for, their VA entitlement. So they need to keep that in mind as well. Usually there probably would be some fees there for the assumption process. And let's see, as far as the down payment, you have to keep in mind, if the seller has owned the home for a period of time and has built up some equity there, then the buyer is going to need to pay them for that equity. Because again, the buyer is only taking over the existing loan balance. So there you have it. Just a few things about assumptions. Really what needs to happen there is if you've got a seller and a buyer that are interested in doing an assumption, the seller needs to reach out to the servicer of the current loan and talk to them about the assumption process and how to get that started and whether or not this might be a situation that would work for them. Okay, if you have any questions, please feel free to reach out. Thanks for watching. See you soon.